Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. I'm going to give you just a brief update on crude oil. So let's get into it. This is a chart of crude oil. This goes back one, two, three, I don't know, 3.5 years, and we have I'd call it a symmetrical triangle. And you can see as these things come to a head, as the lines, as the resistance and support line come together, the battle between the bulls and the bears gets more intense, and that's what causes the energy for a breakout. It could break out either way. It could break out down or it could break out up. And I look at this chart without a name on it. It doesn't matter if it's crude oil, it's gold, it's Nvidia. It doesn't matter. I look at this chart the same way. So my stop is down at 65. This is a big pattern. So whichever way it breaks, it's going to go in a hurry. And so I purchased this on March 8th at 67.08. My stop is at 65. It had a nice small doji bullish hammer last week. Each one of these bars represents a week. It's a weekly chart. So that's bullish. It tried to sell off intraday and then it ended up back near the high for the week. Now, it's not a big pattern. It's not a major reversal pattern. We had one similar back over here. So anyway, if prices can get through 75, you measure the base of this triangle and you project up and you get $142 for crude oil. So that's why you can see why I'm interested. And so on the flip side, if it breaks down, it's going to go down a long, long way. And I will go that direction too. I would short oil if it was to break 65. So anyway, I'll show you why I'm bullish right now. If you think about it, it's kind of a contrarian. I think most people are bearish on oil right now, as well, I know they are because we'll see some sentiment numbers. But maybe, they try to rationalize this. And I learned a long time ago the markets are not rational, they're driven by human emotion. And and we're going into a recession, so people are going to use less gas or drive less and et cetera. So but what about geopolitical risks? What about other things that could happen? Anyway, we're just going to look at the chart and make a decision. So this is where we're at on crude oil. I want to show you the ETF that I use. This does not have a K1, OILK, and we have the same little doji bullish hammer. I got my stop down at 39, and similar to copper, we could see OILK trade up around 46, 47, and then we'd have to see what happens. But that's where resistance is right now. And I want to show you a couple other things. Seasonality. Again, seasonality is just a tendency. I'd rather have it in my favor than not. And the time to own crude is February, early February into July. And you can see right now, we should have got a correction, which it looks like we did in the middle of the month. And so now we'll see. We'll see if it follows its uh, its seasonality. I think this is more important. This is the the commercials, the big boys in the futures markets, and the commitment of traders report. And the commercials are the people in the industry. They're the big oil companies. They're the people in the business that know, and they're deep pocketed and they can change directions of markets. You can see right now they're always somewhat short because they're hedging their product, but you can see they're down to one of the lowest short positions they've had since 2015. So they are decidedly bullish on oil prices, and hopefully that will matter. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Have a great evening and have a great weekend. Adios.